There's no need to hide. We've all been there. I myself have been there as well. We've all paid for some trading service and lost money copying someone's trades. This video is not only going to tell you why that was the case, but what we can actually do about that. Now, first off, there's no reason to be upset or ashamed that you lost money copying someone's trades. As we grow and as we experience things more and more and more, we start to realize that that isn't really a great excuse that we lost money. Oh, someone else lost money. Well, why are you following that person? You got to do your own due diligence to, vet who that person is and why you're actually copying what they do with your own money. However, there is a reason to be ashamed if you're still doing it year after year and continuing to lose money. That's the literal definition of insanity. But why is this the case? Why does it always feel like copying successful traders ends up losing you money, but they make money at the end of the day? Or even better, why does it feel like it works early on and then slowly but surely it's not working and you start losing more and more money? I've got a couple answers and a couple theories as to why that may be the case. First is kind of obvious. They actually aren't successful traders and they're just really good at marketing, because it's very easy to make social media posts and post your gains and screenshots and this and that when you win. It's very easy to go back and delete posts that were wrong. And now you've got a massive list of posts and predictions that end up being right on your page, so it looks like you're super successful when you really aren't that successful. I think a lot of us understand that that totally goes on and is very common in the community. Hopefully we can make a push towards that not being so common, but that has been common over the years, and I don't expect that to go away anytime soon. This next answer is more of a theory, and you may find this to be exactly what hits home for you, because this happens to a lot of people without them really realizing it until they take a step back. And that's, it works early on and then it stops working. Why? Because early on you're new. You're either testing out the new service, you're either brand new to trading, and you're like, I don't know what's going on. I'm just going to follow what they tell me to do. I'm going to copy this guy. He knows. And then as you gain more experience, as you start to understand things, you know your brokerage inside and out, you understand the options you trade or the shares or whatever mechanism you trade pretty well. And you're like, oh, I think he's going to talk about this stock. Or you're on a live call and he's talking about this stock or that stock or this, vehicle, whatever you're trading. And you start to kind of anticipate a little bit. And maybe you start entering a little bit early. Maybe you start taking different strike prices. Maybe you start trading Apple, or maybe you start trading the NASDAQ when the service trades the S&P. Little things like that you start doing because you think you know how to win the game. You think you know what you're doing, when in reality, no one actually knows. All we do is manage risk, take trades that fit a strategy, manage risk, rinse and repeat. So you start adding your spin, and your spin is what ends up pulling you away from what the service or the person you're copying is doing. And so now you're doing something that is not the same. They may make money, you may not. You may think you're taking all the same trades and they're very similar, but they're not the exact same. And over time, that can add up to more and more losses that you didn't realize you were taking, but they stack up and now you're losing money. Another reason is that you just can't manage risk and they go on a red streak. If this person or service you're following goes on a red streak and you don't know how to manage risk, you could wipe out way faster than they may. They may lose $1,000 per trade or $500 per trade for their sizing. But if you don't know how to manage your risk, you could lose 10, 20, 30% of your account in one trade, and then do it again, and then do it again. And then now, next thing you know, you've lost 90% of your account, or you've blown up the entire thing completely. And I'll finish off with this last piece, which is you cannot physically get the exact same fills as the service or person is providing. For example, in the option space specifically for me, one of my first trades that I ever copied was probably back when I was in high school or late high school. And what I decided to do was use one of these services. And I just, for whatever reason, I jumped in and there was a Snapchat earnings coming up the next day. It was like a Thursday afternoon. And I'm like, oh, wow, they're saying to buy the Snapchat calls for earnings. Now, if anyone knows anything about playing options through an earnings report, you are set up for an absolute epic failure if things do not go your way. And so there's reasons, or there's ways you can size accordingly. Sizing for zero, I didn't know any of that stuff. I was brand new. I just jumped in. I didn't know any of the lingo that they were talking about. Lotto trades, none of that stuff. And so what did I do? Buy the Snapchat call. Snapchat ends up going up, but not enough. The next day it goes up like 1% or 2%, and I needed it to go up a lot more for my option to expire in the money. And the thing expired worthless, and I lost pretty much all my money in one trade. One trade. Done. We've all been there. We've all been there. But that goes along the lines of you're not able to copy the exact sizing, fills, entry, exit as someone else. You might think you can get close, but you're not going to be able to get the exact same fills, especially in options, If there's a service that has a lot of people buying the same option contracts, if they are not super liquid, we're talking like the S&P or Apple or something like that, there's a very good chance that when this service sends a ton of people to buy the same option contract and there's not a lot of open interest, you could end up paying way more than what they paid for, which then is going to drastically change your returns if it works or doesn't work. You're going to lose a lot more money if it doesn't work, and you're going to make a lot less money if it does work. So now we covered the why and the answers and the theories to what's actually happening. What can we do about it? I think there's a couple things we can do. You can start off by copying the exact trades, no exceptions at all. Exact. You follow it. You take the same trades. You try to get the exact fills if you can. If you can get close, get close. And if you miss, maybe you don't take that trade. And you log that and you keep track of those things. And then after some time, after enough trades, a large sample size, maybe they take a trade every single day. At the end of a month or two, you have some good numbers. Maybe they take a couple of trades per week, maybe 3 trades per week. At the end of 6 months, at the end of a year, you'll know, is this worth my time? Are they profitable? Are they not? And you'll have a pretty good feel just like that. The next course of action is buy one of these copy services and follow their trades, but don't actually take their trades. Understand what they're doing. Look at the charts. Look at their reasoning. Try to unpack why. What's going on here? And then you can try to figure out if that makes sense to you and craft your own strategy off of learning from somebody else's trades. And there's absolutely no risk that you're actually taking on because you're not taking their trades. They could win, lose, whatever. You're not taking their trades. You're just trying to learn. It's very tough to do because I know a lot of us want to get in, want to get the money going. They want to start making money. I know we want to make money, right? That's what we want to do. But it's honestly a great way to learn by following the thought process behind the trade. Try it out. I know you're paying for the service, so you're probably paying a monthly fee, but you're really paying for that education and not to necessarily copy their trades, if you know what I'm saying. And then the final approach is to really just craft your own strategy. There's so much free information. Hopefully this channel is a great resource to learn a lot of stuff and really ask questions and hopefully find answers to questions that you may have, whether that's, strategies, whether that's psychology, whether that's literally the nitty-gritty inside of a platform, understanding how to do this, how to do that. There's so much more even beyond this channel that you can go and learn and find, then craft your own strategy around. Because at the end of the day, when it comes down to becoming a successful trader, you're likely going to need a strategy. You're likely going to want to do this on your own so you don't have to rely upon someone else to give you the trades. You want to kind of be, doing this on your own time, right? Be your own boss. The freedom is what really attracts a lot of people to this game. And then you can build that yourself. And there's nothing more satisfying, in my opinion, than building a strategy, adopting different things, and then critiquing it to make it your own, and then trading your own strategy, your own ideas, your own charts, your own setups, and making money. There's nothing more satisfying than that. And I don't want to hear that time is a constraint because a lot of people jump to these services because they don't have time. Time is not a constraint. Just zoom out. Take weekly charts, daily charts, 4-hour charts. Don't look at the 5-minute chart. Don't look at the 1-minute chart. You can trade a lot of different strategies, a lot of the same strategies, just on different time frames, and all that means is the trades just take longer, and you don't have to be worried about the exact entry point all the time because you're going to have plenty of time when you zoom out for these things to set up. I personally use something called TradeZella. I'll link them down below. That's where I track journal, log. I can build out strategies. I can do so much when it comes to reviewing all of my trades. That's the best place, in my opinion, that you can go if you're trying to build your own strategy. Again, I'll leave a link to TradeZilla down below. I'm not a sponsor, not a sponsored thing. It's something that I just personally use, and I find that it does actually help when it comes to crafting and building and critiquing a strategy so that you ultimately have something of your own. Thanks so much for watching. If the video is helpful, please share it with a friend, leave a like. I appreciate you guys. Maybe even subscribe, and I'll see you in the next one. Peace.